Alright team, in this video we are talking about Mohnish Pabrai's most recent 13F filing. So this gives us an update to what he was doing with his US listed stocks in the third quarter, of which he owns three. He owns Micron, Seritage and Alibaba. And let's just cut to the chase. He sold 78% of his Alibaba holdings. This is a very big surprise as he's been buying Alibaba for the past 2 quarters. And what's even crazier is that he's spoken recently about how he thinks Alibaba is a fantastic business. I'll play you the clip.
What's your overall thesis with Baba?
Well, it's an incredible business. I mean, just if you look at Baba and Tencent and kind of where they're at and the ecosystem and the moat and what they control and all of that. Look at the tailwinds from China. I mean, there's a lot to me to like. Even more than the large US tech.
So it is very strange to see a great value investor such as Mohnish do a complete 180 in about 3 months and just sell something that he only just bought, really. So in this video, I'm going to talk through some of the main reasons he might have done this, and I'll give my opinion at the end as to what I think his motivation was. So with that said, let's get started. This video is sponsored by Stake. Sign up today for free brokerage when trading US listed stocks and use the referral link in the description for a free stock when you fund your account. So I had a bit of a brainstorming session yesterday when this news broke. Also had a bit of a chat with investing with Tom, and overall I think there are 5 potential reasons why Mohnish might have sold Alibaba. Some are more likely than others. So I'm going to run through all 5 and then I'll give you my opinion what I believe is most likely at the end. So reason number 1, he sold Baba for 9988. So as many of you guys know, when you buy shares of Alibaba, you're buying shares in a variable interest entity in the Cayman Islands. And you can buy shares of that VIE in America, you can buy in Hong Kong, and you can also buy in Frankfurt. Now, the US is imposing new rules around foreign stocks being able to stay listed in the US. It's called the Holding Foreign Companies Accountable Act. And one of the rules is that the companies need to be audited by a US auditor. However, currently, the CCP prohibits Chinese companies from being audited from outside auditors. So because of this, there is a slight risk that the American listed Alibaba with the ticker symbol BABA will be delisted and will trade over the counter. So a lot of investors are instead buying the Hong Kong listed stock with the ticker symbol 9988. And if Mohnish did that, it would look exactly as we're seeing. The 13F would show a big reduction in Baba, but we wouldn't see the Hong Kong version pop up in the portfolio because he wouldn't need to report that. Personally though, I don't think this is what would have happened because regardless of what version of Alibaba you hold, at the end of the day, you still hold shares in the VIE in the Cayman Islands, and if the shares get delisted in the US and it trades over the counter, you will not be able to sidestep the share price declines by holding the Hong Kong version. But, it's still a possibility that Mohnish has done that, however unlikely. So that's reason 1. Then reason number 2, tax. So I'm personally no expert on the US tax system, but similar to what we have in Australia, it seems you can use your capital losses to offset the tax that you pay on your capital gains in that year. So because we're almost at the end of the US tax year, and because Mohnish was down quite substantially on his Baba position, there is a possibility he sold to lock in a loss to offset other gains to minimize his tax bill. And then he'll just buy back in at some point late this year or early next year. Now, in some parts of the world, this tax strategy is legal and in others it's illegal, but I did a bit of research and it seems as though this wash sale rule is actually legal within the US as long as there's a 30-day period between the sell and the new buy. But again, I'm not an expert on the US tax system, so maybe if you're a US accountant watching this, please let me know the specifics in the comment section below. I would really appreciate that. All I know is that, generally these wash sale events are typically frowned upon because it's essentially deliberately manipulating tax laws to end up paying less tax. But, it still definitely happens. And it's one of those things where it's very difficult to police if you do have laws around it. So maybe that's what Mohnish has done in this instance, taking advantage of being down on your position to simply reduce your tax bill, and then he'll just buy in later on. So that is potential reason number 2. Now moving on to reason number 3, and shout out for Tom for raising this point. Maybe he had a very large withdrawal from the fund and he had to sell something. I mean, funds have investors and investors can take money out of the fund if they want to. And if Mohnish Pabrai has all of that cash invested, he'd potentially have to sell down to be able to fund the withdrawal. And there may very well be some quite large investors in that fund that have, for one reason or another, decided to withdraw their money. And if that was the case, he would likely sell the position that he was least bullish on to be able to just fund that withdrawal. And maybe that was Alibaba. It's possible, but I still consider this one to be less likely, and that is mainly because of the next few points that I'm going to talk through. So reason 4 could be that he's had a change of heart around the risks of Alibaba. Now, make no mistake, Alibaba is an exceptional business that's been a fantastic performer over a long period of time, but there are also some risks that come along with it. The main risk is the CCP changing the playing field and Alibaba suffering because of it. And as Mohnish said in that previous clip, he believes Alibaba is, one of China's crown jewels and doesn't believe the CCP will crush them in the long run. But let's be honest, they haven't really felt bad about inflicting pain on Alibaba so far. And because the bulk of Alibaba's business is within China itself, changes the CCP makes to how the Chinese people live and work and play will have direct impacts on Alibaba's business. So there is a potential that Mohnish has decided he doesn't like that sort of risk with Alibaba being so entrenched in Chinese society now. And I think this could be part of the story, but it's only a small part. And I think the much larger reason why I believe Mohnish Pabrai has sold his Alibaba stake is because he's had a better opportunity elsewhere. I mean, it's tough to do, but if you think you've found a great business that will double your money in 5 years and you sink all of your money into it, then say the stock drops by 30%. But at the same time as that stock dropping 30%, you find another stock that could 10x your money in the next 5 years. What should you do? Well, let's have a look. $1,000, we'll say, could be $2,000 in 5 years. But then let's say we actually suffer a 30% decline, so our investment is now worth $700. Then we find a potential 10-bagger across the next 5 years. So we lock in the 30% loss and put our $700 now into our potential 10-bagger. Well, if that situation plays out, $700 turns into $7,000. So it's painful, but in some instances, it could be worth it. And I think that's exactly what Mohnish has done recently, because have a look at this. Mohnish hasn't just sold Baba recently. He's sold a lot of other businesses in his portfolio too. Look at some of these cuts. There's 48% cut, a 71% cut, 15%, 7%, 18%. Mohnish is typically not a seller of stocks. He buys great businesses and then he wants to hold them for a really long time. So I have a feeling he's trying to free up some cash to deploy into a new position. Now, what is that stock? Well, I don't know. However, I'm guessing it's Tencent. Why? Because about a week ago, Mohnish put out this lecture on his YouTube channel talking about, moats, monopolies, capital allocation, etc. And in it, he spoke at length about how he loves Tencent's business and how he prefers their model to basically every other business, including Alibaba. He explained that Tencent is essentially two businesses. There's epic software engineers that do stuff, and then there's digital Warren Buffetts that make investments. The epic software engineer business is getting 65% annual returns and the investment business gets about 35% per year. But the power in having the moat be the software engineers is that talent can be redeployed as needed. It would definitely suck if the CCP cracked down on one of their branches of their business, but if that happened, they could redeploy that talent if they needed to. And Mohnish basically says the success of Tencent's business is in the talent pool as opposed to specifically the businesses that they run. It was a very interesting talk, actually. I'll leave it linked in the description if you're interested. But, long story short, he ends up saying this.
But I would bet that given the superiority of the Tencent model, it would not surprise me that if we look 10 years or 15 years from now, that it's the most valuable business on the planet. And to a large extent, I feel that they may even be able to transcend a bunch of stuff that the CCP is throwing at them and continues to throw at them. So I think what they would like, if the Chinese Communist Party would listen, is listen, guys, just tell me all the rules right now. Don't dribble it out every few weeks. Just tell me all the rules that you want me to play with. And if you tell me those rules, I will reprogram my two engines to still do well based on those rules.
Those two businesses being the software engineers and also the digital Warren Buffetts.
And so in the absence of clarity from the CCP telling them these are the rules, I think what Pony Ma has done, he just said, okay, let's fire both bazookas as much as possible outside China.
So there you go. Fair to say, Mohnish is liking Tencent as a business more so than anything else right now. And he said he's been doing this digging fairly recently too. So I have a feeling now that he's been enlightened to, this potential opportunity that could create higher returns for him over time than what he was seeing in Alibaba. So he's decided to free up some cash and chase that other investment opportunity instead. I don't know that for certain, but I think that's the direction that the clues tend to point. I think it's a case of, Alibaba is a great business, but he thinks that Tencent is better. But nonetheless, a very, very strange move from Mohnish Pabrai at face value. One that definitely caught me completely out of the blue. And if you guys have any other ideas as to why he might have done this, feel free, leave a comment, let me know about it. Let's talk about this down in the comment section below, because I don't know. I'm just guessing, really. I'm just trying to think through these different moves and which ones make more sense than others. So let me know what you think down in the comment section below. But overall, I think that's the reason why Mohnish Pabrai is selling down Alibaba. I don't think it's because he thinks the business sucks. I don't think he's actually done a 180 on what he thinks about the business. I think he's probably just found something better elsewhere and he's just chasing that. But anyway, guys, hope you enjoyed the video. Leave a like on the video if you did find it useful, or if you enjoyed it. I really appreciate it, and it helps get this video out to more people, so I really do appreciate that. Subscribe to the channel if you haven't done so already. If you're interested in learning about the Warren Buffett style approach to investing, the value investing approach, then you can check out PROFITFUL. I've made a full 8-hour course on that strategy, step-by-step course, so you can check that out if you are interested. Links down in the description below. Check out New Money Clips if you want more short-form New Money content. But that's it for today, guys. Thank you very much for watching, and I'll see you all in the next video. So a lot of people ask me what brokerage site I use when I make an investment in the US, and for about the past 3 years now, I've been using Stake. So Stake is a brokerage-free trading app that lets you buy US stocks, and coming soon, they'll also be offering ASX trading as well for all the Aussies out there. So brokerage-free trading, that's pretty awesome, but the other reason I like their platform is because of fractional share trading. So say you wanted to buy Amazon, current share price is $3,450. It's pretty expensive. However, with fractional share trading, say your investing budget was like $500, you could just buy 0.14 of an Amazon share instead, no worries at all. So I definitely recommend Stake, and if you wanted to jump on board, follow my referral link in the description when you sign up, because if you do, you'll get a free stock, either Nike, GoPro, or Dropbox. So the time of recording, at worst, that's $9 US in your pocket. And if you hit Nike, that's $158 US for free. So definitely check them out, get your free stock, and thanks always to Stake for sponsoring the channel.